Hello, and welcome to the 4th episode of Season 7 of the Dark Money Files, in which we shine a light into a murky world. I am Ray Blake, and with me is my co-host, friend and business partner, Graham Barrow. Hello, Graham.
Hello, Ray.
And we interrupt our normal programming to bring you analysis of breaking news.
Oh, how exciting, Ray. What's happened?
A criminal prosecution in London for money laundering, Graham.
Oh, but they happen virtually every day, Ray.
Okay, yeah, but how about a corporate criminal prosecution?
Oh, I take that back. That is a first.
Yes, it is.
Now, the FCA has had the power to do this, Ray, actually, since 2007 when those regulations came into force. But until now, the power hasn't been tested. So a prosecution now is very significant.
It is, Graham. As I suspect many of our listeners will know by now, we're talking about NatWest Group, charged last week. It's alleged that their systems and controls failed to adequately monitor and scrutinise some fairly alarming client activity.
Yes, and this is specifically in relation to just one commercial customer, isn't it, Ray?
Yes, it is. Although the FCA haven't confirmed this, it's understood based on statements by the Crown Prosecution Service and others, usually reliable, to relate to NatWest's relationship with a gold dealer in Bradford called Fowler Oldfield.
Yes. Now, I know a bit about them.
Oh?
Well, they are no longer a going concern, having been raided by the police in 2016. In court, the firm was described as being the centre of a multi-million-pound money laundering business.
And isn't there a link to Bernie Ecclestone, the Formula One former boss?
Oh, good knowledge, Ray. Yes, through his son-in-law, James Stunt.
Fantastic name, isn't it?
It certainly is. And I'm going to move on. Well, his gold business in Curzon Street, which was in a building, by the way, that used to house MI5, was also raided in 2016 at the same time as Fowler Oldfield.
Were the two gold businesses connected then?
Well, the vice president of Stunt & Co. was one Gregory Frankel, who was the great-grandson of the founder of Fowler Oldfield, and at the time was the owner of Fowler Oldfield.
Good Lord. 2016 was an interesting year for Bernie Ecclestone and his extended family, wasn't it?
Yes, and not just Trump and Brexit like the rest of us, was it? It sold Formula One, fair play, for more than £3 billion. His son-in-law's gold business was raided by the police, and in the same week, James's brother Lee, sadly, died at home after allegedly taking an anti-anxiety drug.
And wasn't this also the time that Bernie's mother-in-law was kidnapped for ransom in Brazil?
Yeah, it's an everyday occurrence as well, isn't it?
Yeah.
So I guess not a year that the Ecclestone family will remember particularly fondly.
So in 2016, at the time of the raids, there were 12 arrests at the Bradford home of Fowler Oldfield, but none at Stunt & Co. Both firms went into liquidation, though, along with other joint ventures connecting the men.
12 arrests, yes, and now 13 individuals have been charged with money laundering offences.
Does that include Mr. Stunt?
Oh, yes. But Mr. Stunt will be no stranger in recent years to the criminal justice system. We'll leave it to listeners, I think, to search his rather colourful recent past.
I think that's a good idea. Back to NatWest, Graham. What did they do that has brought them into the frame for this caper?
It is alleged, Ray, that in its role as banker for Fowler Oldfield, NatWest failed to monitor suspect activity by their client, who deposited about £365 million in its accounts over the 5 years, of which £264 million was in cash.
OK, let's just unpack that a little, Graham. £264 million of cash deposits?
Yes, Ray. Banknotes. Proper paper banknotes, apparently.
Over 5 years?
Yes, Ray.
Okay. Which 5 years were these?
It was November 2011 to October 2016.
Okay, so well within the current legal framework and reporting regime.
Oh, yes, it was.
That's over 50 million quid a year in cash, Graham.
Yes, it is, Ray, although the FCA alleges that NatWest failed to properly scrutinise what it calls, quotes, increasingly large cash deposits. So presumably it was less than £50 million a year at the start and potentially considerably more towards the end.
So they were frog boiling then?
Hold that thought, Ray. It's a really important point in this case and one I'd love us to come back to.
Okay, will do.
First, though, would you be interested in knowing how the money laundering was allegedly conducted?
I think I speak for all our listeners at this point in saying yes, please, Graham.
Right. Well, these charges now issued are not the first in relation to the case. There have already been successful prosecutions in the past couple of years of people, including men, who transported the cash.
Tell us more.
Well, a courier would get a text message to tell him to make a collection. He would then collect a bag and drop it off at Fowler Oldfield in Bradford. He would not be told how much he was carrying.
Okay, what then?
He'd get an envelope at Fowler Oldfield reception when dropping the bag. It would have a token to prove he'd delivered the bag, and then he would be paid.
What would happen with the bag?
Well, the bag would be emptied in a back room of Fowler Oldfield. The money would be counted and then recorded straight away in a ledger. Later, the records in this ledger would be cross-referenced against CCTV and allow police easily to identify the couriers.
And how many were there, Graham?
There were 4, Ray.
And these were career criminals, were they?
Well, no, that would be unusual, Ray. The couriers represent the most visible part of the operation. It would be unusual for them to be anything other than patsies who either didn't know what they were doing or at least were not senior members of the criminal gang.
And that seems to have been the case here. When sentencing 4 couriers, the Crown Court judge noted that they'd been targeted for recruitment because of their debts, often from gambling.
Now hold that thought too, Ray, because that's extremely significant.
Will do. Back to the money though, what's next?
Well, it seems that what happened next was that Fowler Oldfield would simply take the cash to NatWest and pay it in, ostensibly as part of its legitimate business activities.
Over £1 million a week? In cash? Did this raise no eyebrows?
Well, we'll have to wait until the 14th of April to find out. That's when NatWest are required to attend Westminster Magistrates Court to face the charges.
I'm tempted to say I'm looking forward to it.
I'm not sure NatWest are, Ray.
Well, no. I mean, there must be a good likelihood of conviction.
Well, we haven't seen the case details yet, so it's not possible to be definitive here. But what we do know is that the FCA started investigating NatWest on this matter in 2017. That means there's been a 4-year investigation, which implies for me, well, a few things.
Well, for one, they're going to have a good case.
Well, yes, for more than one reason. I mean, this is the first corporate money laundering charge that's been brought under legislation that's been in force since 2007. There's been public pressure for some years now that the banks, the big banks especially, should be held accountable for their role, real or imagined, in a range of societal and economic woes.
Yeah, I mean, the senior manager regime in the UK was at least part owing to the backlash after the financial crisis of 2008, where no bankers were seen to be held accountable for a crisis the banks were widely held to have created themselves through their lending practices.
And then there's the legacy of the Serious Fraud Office, the SFO, who over years and years repeatedly failed to gain convictions in high-profile big business actions and were much derided in the end.
So, putting all this together, the FCA are not going to be testing these powers for the first time with a weak case, are they?
Well, you wouldn't have thought so, Ray.
Do we think they had a choice of cases to bring first?
Well, they've been working on this one since 2017. It's hard to imagine it's the only case they've been working on over that period.
And actually, we know it isn't. It was reported last month that Santander is cooperating with the FCA in their investigation of possible money laundering offences, again, curiously, over a 5-year period.
And who knows how many other cases are active?
It's a fair question, Graham. This is a criminal prosecution. What's the nature of the power the FCA has to bring it under the 2007 regs, Graham?
Well, Regulation 45 provides that non-compliance with the regulations can attract a custodial sentence of up to 2 years as well as a fine. There is a statutory defence available to such a charge if the relevant person took all reasonable steps and exercised all due diligence to avoid the offence being committed. In assessing whether there's been a failure, the court must take into account the relevant guidance in place at the time.
Yeah, now the regulations provide for both individual and corporate liability, because Regulation 47 provides that if a body corporate is shown to have committed an offence under Regulation 45 with the consent, connivance or neglect of an officer of the body corporate, the officer and the body corporate are both guilty.
So far, only the body corporate, in this case, is in the dock, though. Specific officers have not been charged at this point.
But what's the significance of this as a criminal prosecution? Firms get fined and censured all the time. What's different this time?
A criminal prosecution is way more significant, Ray. Conviction comes with an unlimited financial penalty, for one thing, and the reputational hit would be incalculable. Pretty much all fines to date can be thought of as kind of out-of-court settlements where the FCA and the firm came to an arrangement and the drama of a court case is avoided, but this one could go full John Grisham.
And theoretically result in the firm losing its authorisation as a regulated entity.
Yes, although the FCA has already said it is not proposing that outcome here.
But I wanted to talk about where any monetary fine will be paid from, Graham, and who it will be paid to.
Go on.
Well, think about this. NatWest Group is majority owned by the UK government still.
Yeah, although I see the government sold back a chunk of its holding to the bank last week, reducing its stake somewhat.
Yes, at a considerable loss still. It's all about timing, Graham.
Clearly, Ray.
But my point is this. If NatWest gets a fine, it will be paying money to the Treasury, which represents the UK government, the bank's majority owner. It will be paying itself.
And where will all the money be coming from, Ray?
Well, one place it won't be coming from is the criminal funds. The police seized all the gold firm's assets back in 2016. The firm's in liquidation, having left NatWest considerably out of pocket by defaulting on loans that have been made to it by the bank.
So if NatWest needs to find money to pay a big fine, it will come from where?
Well, it can only come from its general resources, Graham. And that will be funded either by shareholders through reduced returns.
Of whom the chief shareholder is the UK government.
Quite so, Graham. The government pays the bank so the bank can pay the government, etc., etc.
Or where else will the cost land then?
Or with the honest customers of the group who will face fee increases or service cuts to cover the cost of the fine.
Do you know, that seems a bit inequitable, doesn't it?
Well, it does a bit, yeah.
So what's the answer, Ray?
Well, there isn't an easy one. But I suspect if that's how this plays out, there will be pressure for the FCA to use its powers under the senior management regime and call individual executives to account.
We shall have to see. But this is a very interesting case for other reasons, quite aside from the legal novelty, isn't it?
Graham, you're so right. The NatWest Fowler Oldfield case exemplifies a key criminal methodology in money laundering.
And I take it you're not talking about delivering sports bags full of bundles of fivers to a high street bank counter, are you?
Well, not directly, no.
Classic typology, though that is.
Yes, quite. I'm more interested in what it tells us about how criminal interests infiltrate the banking network.
Gotcha. Now, earlier you spoke about frog boiling.
Yes, it's an unpleasant analogy, really, but a well-known one. Toss a live frog into a pot of boiling water, for whatever reason, and it will have the wherewithal and the motivation to jump back out again.
Yeah, not an outcome you'd want in the culinary context, Ray.
It's not ideal, Graham, no. But if you put that same frog instead in a pot of cool water, which you then gradually heat, the frog will stay exactly where it is. It'll never be alarmed enough to escape, even when the water reaches a non-survivable temperature and it dies.
I like the use of non-survivable temperature. Kind of gentle way of saying it just slowly boils.
Yeah.
And that's relevant here, isn't it? Because we're told the cash deposits gradually increased in size over the period.
Now, Graham, people hate being inconsistent, and criminals prey on that. Today, my gold dealer comes in and banks $5,000 in cash. No one bats an eyelid. Next time it's $8,000. Not a problem. Before long it's 12, then 18, then 25.
And because each of those is the continuation of a pattern, it represents a small rise over what was previously approved, and no one is spooked enough to jump out of the pan.
Until before you know it, you're taking in $50 million a year.
Yeah, but presumably you've got transaction monitoring alerts sounding.
Well, yeah, you have, but a couple of points here. First of all, do you pay more attention to a fire alarm that goes off every week or one that you only hear once in a couple of years?
I think we know the answer there, Ray.
I think we do. And when you get a TM alert for a client, what's the first thing you do?
We look at the file, Ray, see what they've been doing previously, see if this transaction is completely out of line.
And then you'd be faced with lots of perfectly consistent activity and approvals for exactly this sort of thing.
Because psychologically you invest more faith in past decisions by other people than they might merit, this outweighs often your own uncertainty.
That's exactly right. Ignoring the fact that everybody else who's reached that in arriving at their past decisions face the same uncertainty. That, Graham, is the frog boiler typology.
Well, yes. Now, there are some other notable points of this case too, aren't there, Ray? Fowler Oldfield has been around for a long time. I mentioned it was founded by a great-grandfather of its last owner.
Yes, it was founded in 1897.
And I'm going to presume, potentially unwisely, but I'm going to anyway, that it wasn't actually a money laundering operation for the entirety of its history.
No, it seems to have been an entirely legitimate operation for most of that time.
So it's probable that when it became a NatWest Group customer, whenever that happened, it was perfectly respectable and would have had no problem being onboarded.
Yeah, even assuming onboarding controls back then were as stringent as they are now, a legitimate business without criminal dealings would not have had a problem obtaining banking services.
So this threat to NatWest came not at the gate, but from inside its walls.
Such an important point, Graham. Banks spend so much of their time, effort and money on preventing the bad guys from getting through the gate, but we often wonder how much scrutiny there is once those clients are within their walls.
This is a really clear example of how things can and do change. And if you're not alert to that, you can get badly stung. I know, Ray, because I've heard you talk about it before, that you've got quite an interesting analogy for this.
Well, I liken it to dating, Graham. When you're looking to attract a life partner, you woo them. Expensive dinners, long walks, endless conversations where you listen intently to their every word.
I recognise that scenario. Compliments on their appearances, gifts, thoughtful surprises, love letters even.
Yep, all of that, Graham.
Been there. But then, having secured a long-term relationship with a suitable life partner, before long it's toast-based dinners on trays in front of the telly, isn't it?
Well, it can be, Graham, yes.
To return to banking, Ray, quickly,
Yeah.
before I get too uncomfortable, it's as though having won the client, we lose interest and assume they're ours for life and that they will never change.
Yes, I'm glad too that we're back to banking.
You can take an analogy just too far, can't you?
You can.
But, seriously, this is where NatWest problems arose. This was an existing client, perhaps, although we don't know yet, of quite long standing, a client with a good record of profitability and no record of suspicion that quietly turned into a significant money laundering operation on your watch.
Yup. Interestingly, the word oversight has two quite contradictory definitions, and both might be relevant here, Graham.
That's a fantastic observation, Ray. That's one of those words, isn't it?
Yeah.
Yeah. Yes. So this change in activity might not always be what it looks like either.
What do you mean, Graham?
Well, here it looks like under its existing management, Fowler Oldfield turned to crime. We don't know how or when this happened, but it looks like a voluntary decision on their part.
Well, why wouldn't it have been?
Well, remember those 4 couriers, Ray?
Yeah, what did the judge say about them again?
Well, that they've been coerced into acting because of gambling debts. The implication is that these people were ensnared into dangerous criminality and put in a place where they couldn't really say no.
Yeah, I see that.
Well, I wonder if this isn't happening on a bigger scale with actual businesses as well.
How do you mean?
Well, Ray, let's say you're running a family-owned business that's been successful for generations. It's paid for your upbringing and education, all of your family, as long as anyone can remember. It supported your lifestyle very nicely, and the plan is it will support you raising your own family and provide careers for your children in due course.
Okay.
But that's coming to an end. The last few years have been tough. You've been aware for a while now that the business may fall apart on your watch. You're maybe in denial to an extent, or hoping you can work or trade your way out of it.
It's not unknown.
And then you get an offer from a friend of someone you know vaguely. She has a way to save your business. Over the coming years, she's going to put £50 million of funds into your business and through your books, and you can keep half or a chunk of it, whatever, as a profit for your business. She'll bring accountants and bookkeepers too and cover all the costs of making it work. You can continue, but she will direct you to make certain trades or transactions with your banks.
If this is a lifeline to your business and your family and was presented to you as essentially risk-free, if you were facing ruin otherwise, it might be hard to say no. And how many have said yes in recent years? If this happens to one of your clients, either those who own the business or 1 or 2 individuals with banking or trading authority, suddenly a reliable and bona fide client, cleaner than clean for years, for decades, has been compromised. Suddenly they're not the client they always have been.
No, and you can go and check their company's house records as often as you like. You won't find any official change in ownership or control. Your only defence is being alert to changes in their behaviour, even if those changes come about slowly and gradually.
And even if those changes are actually making your life easier or helping you reach your targets.
And here I think we'll leave this case for now, but it's one I'm sure we'll revisit in time.
Well, what's next, Graham?
Back to the normal programming, Ray, and I think we owe an episode that touches on investigations.
Oh, I'm looking forward to it.